Hello traders everywhere. Adam Hewison here. It's good to be back. I've been away on vacation, as you may know, and coming back, and what do I see? Red scores right across the board, starting with the S&P, Dow, NASDAQ, silver, gold, copper, crude oil, euro, and of course the Reuters CRB index, which measures the rate of inflation. So we've actually seen a complete reversal in some of these markets, because when I left, this was in a green mode for the monthly, and also for the Dow and also for the NASDAQ. So let's get right into it. This is where we're looking at how we analyze markets after we've been away from the market for about a month. So let's get started. I'll show you what I do and how I use this MarketClub. So we're going to look at the charts right here, and you can see, we'll scope this out. Let me just maybe go perfect streaming. I'm going to minimize, Control N. So I've got, for some reason, we've been away, and I just want to make sure we've got everything right. So let's just scope this up. So this is looking at the S&P 500. We have a minus 85 score. Clearly, the monthly has turned down from 1312. We're currently trading at 1324. This formation we're seeing right now is not a positive formation whatsoever. And I would say this is probably more like a small correction after being very heavily oversold, hitting the 1300 target. I would say this is going to be basically start collapsing, and we'll see this market resume its downward trend. One thing to look at, and I'm going to score this up here, scope this out a little further so we get a good picture. And this is the picture I see in this market. So taking our trend line tool, which is right here, going from the lows, scoping this up. Remember, we need 3 points to get this. And let me see how I can do my drawing tool now, because that's another story. Hold on. Oh, there it is. Okay, so let's see. So let's say we're looking at the 3 points. There's one here, one here, and one here. That's a perfect trend line when you have 3 points that touch. Doesn't matter how far apart they are, as long as they touch. But once you broke through the trend line, which is right here, that's the breakout right there. You can see the monthly kicked in shortly thereafter, but before that, and let me just take this off the screen. But before that is you had a weekly comment right there. This is why the weeklies and the monthlies are so powerful when you combine the two of them together. Now the question is, how far is this move going to come down? This to me is a very negative flag formation and indicating a move potentially, and I'll show you what, I'll just draw this on the screen again. So a flag formation is like this. You have this sort of pattern, you have the sharp down move. So you can say from, let's say, the 1400 level down to, let's say, the 1300 level. So the breakout is just above 1300. So you should be looking at somewhere, I think, just around these levels here as a target zone. So we could also measure that by going into a Fibonacci retracement. We've done this before. So you'd simply choose, hold on, get this right. Okay, that's not what the tool I want. Sorry guys, just trying to get back into the mode here and just taking a little bit of technical challenges here. All right, so let's see if this works. Okay, so the Fibonacci retracement, we want to take it from the highs we talked about there down to the lows, and that comes in at 1209. Isn't that remarkable? So we've got a 1200, right around the 1209 area as a target zone. So I would take this as the target zone, 1209. This is not a positive sign. I don't know if anyone is saying things are going to be well in Europe, but we were talking about that in a little while. But this is what we're looking for. This market is going to break down and have another big move down, in my opinion, based on the trend line break, the Fibonacci retracement, and the fact that this is a negative pennant. So let's go to our next market. And the next market we're going to look at is going to be the Dow. Pretty much the same picture here. Same type of pattern. You've broken the trend line. You're looking for, let's just throw the Fibonacci number in there again. So you'd be looking, I would think, back down to the 11,500 level, give or take 50 points. So I think that would be a good target. Again, this is not a positive sign at all for these markets. These are bear markets, and you've got a minus 85 reading. Now, there'll be some stocks, of course, will bump against this trend, but for the most part, the overall sentiment in the market, in the Dow Jones Industrials, is negative rather. So look at the next market, and the next market we're looking at is going to be the NASDAQ. And the NASDAQ, again, we'll put the Fibonacci numbers in here. And the Fibonacci numbers, 2,621. So I think it's fair to say 2,600 would be a good target zone for this market. And again, it's 2,850. So quite a bit of movement on the downside. And all of these equity markets, do not get sucked into thinking it's a bottom, it's a buying opportunity. I would not get excited about this market until we have a green monthly trade triangle. That's what's going to turn the markets. So if you look at this situation just with our triangles, you can see here's a buy, here's a sell, and you can see they've worked out very, very well over the course of time. So let's move on. Let's look at the silver market. Again, the silver market is negative. You can see the monthly kicked in here, and it kicked in here again, which is just about, let me just take this off for now. But basically, you see just after I left, of course, on May 3rd, I left on May 1st. The market came under pressure and had a big move down, and it's still not over. Now, obviously, these are levels of support, which you can see, which are right around the 20, let me just call that 26 level. So it's very close to support, but nonetheless, this is not a positive picture in this market at all. That's a negative triangle to go lower. That's a technical term, not one of our MarketClub trade triangles. So let's go to our next market, and that's gold. Gold actually started out the day on a pretty positive note, but it's just coming back down. Minus 100, trend very clearly down. This is huge disappointment to the bulls who have been harping about all the problems. I would not get excited about gold. Now, if you remember, the monthly kicked in some time ago, right here at 1532. Now it's 1557, I know, but look at how many opportunities you had to sell this market just based on the weeklies. So there's a weekly signal at 1705, and that was the last one we had. So when you combine the weeklies and the monthlies, you really get a great sense of how to trade the markets on a very non-emotional, non-news setting type environment. So let's go to our next market. The next market is going to be copper. July copper, we've moved to July copper. It's minus 85, so we know the trend is down. Everything seems to be down here, and again, you can see how this formation is not a positive formation. I would not be surprised to see us go down and test the 310 level again in this market, particularly if all the markets are going to be, if the Dow, the NASDAQ, and the S&P are all negative, it means that the markets are in a negative sentiment, and copper is it's being viewed as an economic asset right now, which means it's going to be down as well. So let's go to our next market. The next market is going to be crude oil. Crude oil, definitely on the defensive, and with the economies around the world contracting, recession, obviously in Europe, there's no hope anything is going to be positive in any time soon in Europe. So you could look at this, and you could take the Fibonacci tool. We've talked about this before. Pull this down to the lows, and we've had the 61.8% Fibonacci retracement, which means we may have seen some sort of new level in this market. Now, it depends on what happens to the, obviously, oil's priced in dollars. It depends what happens to the dollar, what's going to determine the price of crude oil to a large extent. So let's go to our next market. And the next market we're going to be looking at is the euro-dollar. And the euro-dollar is clearly on the defensive. Now, remember, we talked about this market before we left. I'll get my drawing tool out. We said this is the line in the sand right here. That's the 130 level. Clearly, we broke through there. 125 was our target zone. We've hit the target zone, but the market is still in a negative trend. Negative, negative, negative. And all three, a minus 100 score, very negative. I can't imagine, the demise of the European equity or the European euro market has been ongoing. I can't see anything that's going to change it. The only thing that could happen is Germany leaves the euro unless everybody else fight for themselves. So this is not good patterns when you see lower highs, lower lows. That's a downward trend, and it's likely to continue. So Anyway, it's good to be back. I think that's all the markets we have for the day so far. Let's just clear that off the screen and go to see if we have anything else on the board. But generally speaking, yeah, let's do this. Reuters CRB index is the last market, and this is going to give you an idea of just how inflation is being wiped out here, and we're in a deflationary move right now. Minus 100, clearly a downward trend. And if we scope this out even further, let me go back up here. Bum, 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 bum. You can see that we've also had a, let me just put a simple line chart on, easy to do with MarketClub. We take our trend line again from the lows, draw that out. You can see pretty much you've got all the three lines, the 3 points, actually 4 points in this area, broken through here. Clearly this market could go down to the 200, 220 level from current levels, which would mean that commodities in general are getting less expensive, including oil, including some of the foods groups we talk about, grains and so forth, which make up the CRB index. Very important index to watch. It tells you a great deal of what's happening in the marketplace generally, and it can be a big, big help. Well, hey, this is Adam Hewison for MarketClub, and it's good to be back. And I want to wish everyone success. We still have a number of months left to trade, 7 months left, 6 months left to trade, and I think there's been some great opportunities to make money with MarketClub and our trade triangle. So let's stay tuned. We'll be back tomorrow, same time, same place. Have a great trading day, folks.